Hey everyone, I'm Mark Goucher and welcome to another video of Simplicity Investment Watch. Today is Wednesday, January 1st, 2025. Happy New Year. We are in the halftime break for the markets this week, much like last week. Christmas interrupted the middle of the trading week, and this week and this year, New Year's again gives us another break in the middle of the week. Um, but action will resume tomorrow for 2 days of trading this week, and I have two stocks that moved off of my bull buy list. Other than that, things look pretty similar to last week, and I'll show you that in just a minute. But before we get into the major action for today, let's go over our disclosure. All right. We do not give financial advice, and this information is not for investment decisions. This is for educational purposes. The stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is a suitable investment profile for you, given your investment goals and objectives. All right, for the major markets, first I bring up SPY, the ETF for the S&P 500, and basically the Santa Claus rally is looking like coal in the stocking this year. The rally being the last 5 trading days of 2024 and the first 2 trading days of 2025, so Thursday, Friday. But here's where we are so far. Basically, I put within this box are the days that so far that account for the so-called Santa Claus rally, or the time frame that should be happening. And as you can see, it's not. So what do we have? I have an anchored VWAP off the high. And what date is that? December 4th. And the action was a lot of sideways and then down, and it did have a 4-day recovery here, but never really made a new high. The positives so far out of this, and I'm not panicking because it is finding support at the Ichimoku cloud, this cloud right here, and yeah. So anyhow, so it's finding support at the cloud, and we still have 2 days left, so there is the potential. I mean, I don't think it's going to rally above this high, but in any case, we do have 2 days left of trading to see if we can at least recover a little bit and make this Santa Claus rally at least a little more than a loss. So we'll see now where that goes. Until the action retakes this anchor VWAP off the high, I mean, it's a hold for me. You need to look at the major markets because that is the tide, and we're mostly investing in stocks and options that are not always, but in large part, are going to go with the tide. A lot of what was on the buy list is on hold because of that. My personal buy list. So seeing this S&P the way it is, you've got to basically, there's very limited things which I'll go into on the buy list that I would say move into right now. And until this S&P 500 regains where the buyers are taking over when it gets above this anchor VWAP, it's the whole thing's kind of on a hold right now. QQQ for the Nasdaq, same, very similar picture. There's an anchor VWAP set off the high. Current action is below that. Sellers are in charge until buyers are back in charge. Move forward with caution on what you're doing. And then for the Dow Jones Industrial ETF DIA, this obviously has been the worst picture or chart, so to speak, with this down, 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 down. There was the 4-day bounce, just like on the other charts. But again, what's different on this one compared to the other one is that yes, it's finding support in the clouds, but it's heavily into the clouds. I'm watching closely to see if this comes through, because then, although the cloud may be offering, technically speaking, may be offering support, once it gets through, the cloud could then be a factor of resistance. So that's something to watch for. But right now, it's in the cloud, and with any luck, with the final 2 trading days of this week, and then moving into next week, this can regain some momentum. All right, for the major economic news for the balance of the week, tomorrow being January 2nd, 8:30 in the morning is the unemployment claims. That's really the most significant news event for tomorrow. As you can see, oh, and by the way, this is compliments of forexfactory.com, so credit to them. Full disclosure, forexfactory.com is supplying this information, and the unemployment claims are forecast to be at 222,000, a little uptick from the previous number of 219. And if that number comes in obviously higher, significantly higher or lower than that number, it's going to be a surprise to the market, and the market's going to react accordingly. So just be aware of that. The good news is, so to speak, is that that does happen before market opens, so that news will already be baked in into the futures prior to the market open at 9:30, and it's something you're going to know going into the trading day. Then on Friday, the only real major economic news is the ISM manufacturing PMI. That is supposed to be 48.3 is the forecast. Um, Pretty much, even or close to the previous week, so not much change or momentum or is expected with that. Um, And then the rest of the news for the day, besides the manufacturing prices, which comes out at the same time, 10 a.m. on Friday, that's pretty much the biggest news or the biggest news event that could potentially move the markets for that day. Okay, so this is the updates, or these are the updates to the buy list for the bullish strategy. So these are all I'm bullish on all of these. However, the ones that are in yellow, I have on hold right now. I would not take new positions. If you're in them already, fine. It's not a sell. The ones that are a sell are Carvana. Since I added Carvana to the list, I think I added this like at 255. It has come down significantly. So I I'd moved that to basically a sell. It's moved far too much to be of interest to me for what I'm looking for momentum stocks on the upside. And same thing with Palo Alto. That one is going to be removed from the list. That's a sell, and I'm taking that off the list. So next time I report or put up the video or put up a video, that's going to be gone as well. Outside of that, the buys that I have on here, which is in green, meaning that it's good to go. It's not a hold, it's a buy. You can action basically the bullish strategy, any kind of bullish strategy against them with your option plays. Typically the covered call strategy, but you can do bull put spreads, vertical spreads. You can do a synthetic covered call, which is a poor man's covered call. Um, and I realize I keep saying that I will put up a video to explain those, but I certainly will very soon. But for now, basically, you can do bullish strategies against Chewy, Hood, Taiwan Semiconductor, and United Airlines. Those were the same green or buys that I had for last week. Everything else is on hold and remains on hold from last week. And two of them, as I've already said, are coming off. So those are the updates to the bullish strategy action list. For the bearish action list, again, this is pretty much what it was last week. Abercrombie and Fitch is a hold. Don't act on it with any bearish strategies, such as a put or a bear call spread, vertical spread. The two that were actionable last week and still remain actionable are Celsius Holdings and First Solar. So those you can implement a bearish strategy against, or I'd be comfortable doing that. And this is pretty much what it was last week. So the four stocks on my bullish strategy list that are active, take action buys are, as I've already stated, Chewy, Hood, Taiwan Semiconductor, United Airlines. Here's that list all cleaned up just to show those. Of note is there are earnings coming up for Taiwan Semiconductor for January 17, so something to be aware of for any strategies you may want to implement. Uh, I oftentimes will try to avoid an earnings event. I like, for instance, taking an option or doing some kind of option strategy that has an expiration date of January 24th, which is the week after, is I'll try to avoid that. But in any case, just be aware of these earning dates when you're making your decision. They could, as you well know, earnings news can have a significant impact on the price of a stock because of the market's reaction to the earnings news. And those are basically surprises that you may want to avoid or at least be aware of as part of your decision making. All right, on that action list is Chewy. This is the chart. I set an anchor VWAP off of this high, an anchor VWAP off this earnings right here on the 4th, and then another anchor VWAP off this high. I want to see the price action taking, the buyers are in control. This is the higher high. The anchor VWAP is set off of that, and since December 16, for the most part, buyers have been in control. So this is why it remains on the buy list. So I'm comfortable with this action, and it sits above the Ichimoku cloud right there. And Hood is on the list. The only caution here is, as you can see, I have an anchored VWAP set off the high for December 16. The current price action, or the price action from the 31st, the last trading day, is below that anchored VWAP. So typically I would say that the sellers are in control. But I do have an anchored VWAP set off the last earnings date and also from the low that resulted right after that. And buyers have been in control this whole entire time. So I am comfortable with this. Also, it is in TTM consolidation right here. So this action basically is not, I mean, it's not exactly sideways, but it's pretty close to sideways as you can get. From that high close to the close on Tuesday is a 14% decline. But because it is in squeeze and the action is just below the this anchored VWAP, however, above the anchored VWAP from this low in this last earnings report, I'm still going buy on this, or still action this on the upside. TSM's on the action list. So I have the anchored VWAP set off of this earnings, which the buyers are in control from that last earnings. I also set one off of this high on the 5th, and the buyers are in control except for the 31st. The the um, the volume was low that day, which is to be expected. Obviously, a holiday, so not all traders were around. Makes this action a little less meaningful when the volume's low. So that gives me a little added confidence. But I expect this to find the fact that I have this is the 50-day moving average, this dash line right here. The fact that I have the cloud, I have a 50-day moving average, and I have the anchored VWAP off the last earnings, all there as potential support for this, is what still gives me the confidence to go with this as far as a action for a bullish strategy. And then finally, UAL, United Airlines. Similar. This is earnings, the last earnings report back in October 15. Buyers have clearly been in control since that earnings report. I set an anchored VWAP off the high of December 5th. Excuse me. And buyers have taken control since then, as of December 23rd. This is a doji, a lot of indecision, basically, is what a doji means. It's not really, yeah. The fact that the doji closed, it's more of a telephone pole doji, meaning that it closed at the upper end of the day, is somewhat positive for that. Usually a doji is just indecision. It's like a draw for the day as far as buyers, sellers. And then even the action on the 31st was very tight, but the volume again was very low. So that still gives me the confidence to move forward and still consider this an action for bullish strategies. And the other thing to note is besides the low volume, which was typical for the 31st, this is back in consolidation, TTM consolidation. So there's just a lot of sideways action. It's in consolidation. Obviously I look at TTM consolidation for the decision to go the next leg up. So this has been moving nicely. It moves sideways. That's the time to take your action as it prepares itself, hopefully, for what is the next leg up. All right, so based on the stocks that are on the active bullish list, I plugged them into a covered call filter that I've created using barcharts.com, and these are basically the highest premium on sells. So basically the covered call, just to refresh for those who are not familiar, UAL's United Airline, basically what this is saying, that with the last price being 97.10, that's not necessarily what it's going to be in the morning. So you need to, run this math in the morning. But basically, assuming it was 97.10, you can go buy 100 shares of it. You buy 100 shares of United Airlines, and then you subsequently turn around and sell a call contract, meaning someone can call it away from you at the strike of $102. So you're buying it at 97. You have to sell it for 102 if that happens. And the expiration on that contract is January 10th. So that can only happen between now and January 10th. After January 10th, this contract expires. Now, what do you get for that? You get $1.43 times 100, because option contracts are times 100. So basically, you get $143 for selling the right for somebody to take away from you at 102. So that's the highest offering out there. So that's probably your best value right now. If it gets taken away from you at 102, you get a 5% gain on the stock, and you get 1.5% on the premium for selling that contract. So when you combine those, you get 6.6%. But if it doesn't get taken away from you, you still get that 1.5% immediately. You get paid that $143 immediately when you sell that call. And then if the stock does not get taken away from you because it does not get to 102, you have the ability after January 10th to go ahead and write another one, which is the whole idea of this. So the next one is Taiwan Semiconductor. There, as far as value out there, you can get $131 for selling a contract against that for with a January 10th expiration. And then UAL, if you move to the 103 strike, so the first one I showed you was the 102 strike. If you push it out a little bit further to 103 strike, which means if it gets taken away from you, your return is 6% instead of 5%. You can get $104 for that one. It kind of makes sense, right? Add $1 here, it adds $1 here, pretty much for the most part, and you get 1.2%. So those are the best values out there. And I ran this for January 3rd, which is this Friday's contracts, as well as January 10th. There really wasn't much value at the January 3rd contract, which is basically 2 trading days away. So everything you see here, as far as best deals or best value as far as selling contracts, are for January 10th. And yeah, the majority of it is with either United or TSM, as you can see here. The top picks are within those two. Hood is here as well. What's it giving us? Stock closed at 37.26. You can sell at 39.50 with the January 10th expiration for 49 cents, which is $49. You get 1.3%. Basically immediately for that $49. That $49 represents the 1.3%. And that's just per contract. So if you end up, that's per 100. So if you ended up, because this is a lower price stock, maybe you have the ability in your account to get 200, 300, 400 of these, whatever works for you. And if you have margin, you're going to probably pay half of that. But in any case, you can sell 2, 3, 4 contracts depending on how many lots of 100 that you buy of this particular stock. So here, these are the best values for basically what is the January 10th expiration dates on the stocks that are on the action list for bullish. Okay, that's it for today. If you have any questions or you need to reach me, my email is mark@simplicityIW.com. If you, I'm sorry. Thank you for your interest and your time. Please click subscribe on the channel if you haven't already. That helps me with the number of subscribers and also advises you when new videos come up. So you'll be notified through YouTube as to when those videos are available, so you can see them in a timely manner. And once again, thank you. Remember, keeping things simple is really smart. All right, folks, take care.